Many have said that the amount of institutional cash that's been flowing into Bitcoin and crypto markets over the past several months is unprecedented. However, the institutional flood of cash into Bitcoin was not exactly unexpected. Since Bitcoin's big boom in late 2017, the institutional finance world has had its eye on crypto. While most institutions have been hesitant to make the leap, many of them have quietly been gathering information about Bitcoin and other cryptocurrencies should the right moment to invest arrive. After years of developing the infrastructure to support institutional investments, it seems as though the right moment for many institutions to jump into crypto is now. Companies like MicroStrategy, Stone Ridge, and Square led the charge in the fourth quarter of 2020. Tesla's $1.5 billion investment in the first quarter of 2021 has caused some analysts to question if other major publicly traded companies might soon follow behind. Recently, finance magnates spoke with Peter Najarian, the chief revenue officer at BitGo, about what's happening on the institutional side of the crypto space. BitGo has been dealing in institutional digital asset custody, trading, and finance since 2011. I'm Rachel McIntosh, and this is FMTV. First of all, Pete, thank you so much for taking the time to meet with me today. Such a pleasure to meet you.
Well, it's great to meet you. Thanks for having me.
Absolutely. So, without any further ado, I'd just like to ask you about yourself. Who are you, and what kind of work do you do?
So I am the Chief Revenue Officer at BitGo, which is a fancy way of saying I run the sales and marketing teams there.
Mhm.
We are a full service front to back institutional crypto solution. And so I manage the client businesses, the development and the ongoing account management of our client businesses with my team.
Okay, wonderful. And yes, as you said, so BitGo is a institutional crypto firm, and your website says that you guys are, quote, the leader in institutional digital asset custody, trading, and finance. So can you talk about what that means in a practical sense? What kinds of services do you offer your institutional clients?
Sure. We offer a custodial environment and trading platform whereby institutional investors can come and open a regulated and insured trust relationship with us
Mhm.
in a traditional trust account. And from there, enter into the purchase and sale of digital assets, purchase, sale, and securing of digital assets.
Mhm.
What that means is, a big institution, and that's the big change is the pace at which they're coming into the market, will look for the right partner or partners to access what is obviously a new and rapidly changing asset environment. So we've built and now provide and have for some time what many in the market believe to be the most secure and intelligent way to trade in these assets.
Yeah, and there's so many questions I want to ask you about BitGo, but I want to touch on something that you said really quick, which is the pace at which these institutions are entering the market. Can you talk a little bit about the changes that you've seen? I suppose probably, even since the beginning of this year, there's been quite a difference.
Yeah, it's been an incredible change. I mean, this is what we had all expected. Those of us that are believers had expected this would
Mm,
happen at some time. I think that um, in a perverse way, the realities of what's happened with COVID and more importantly with this extreme monetary expansion that's gone on globally, there's a little bit of an unlimited kind of money printing machine happening at the Fed and at other central banks around the world.
mm,
As a function of that, there's a great fear among big institutional investors that the only way out of this level of indebtedness is some long-term period of central banks around the world trying to inflate their way out of it and effectively what's called monetize the debt.
mhm,
So because of that, there is pretty great demand for hedges to inflation or hedges to currency debasement. And Bitcoin specifically has developed a use case and is considered to have probably the most important use case for crypto in the early innings of this whole shift as a store of value, as effectively digital gold.
mhm.
So with that, we've had a significant move of institutional investors making their first investments and significant investments in Bitcoin to start. That's now extending to some other cryptocurrencies, some other digital assets, but it's still primarily a Bitcoin investment thesis for big institutions, but those institutions have varied from big family offices around the world to university endowments to private pension systems, private and public pension systems. As well, it's not just, there was an expectation that this is going to be led by kind of hedge funds or folks that are more interested in being in trading aggressively in markets, and it's been some of that, but it's been even more a wave of more buy and hold traditional institutional investors coming in and making their first investments. And it's, with some names that are surprising. For example, Mass Mutual is one of the oldest life insurance companies in the world, maybe the oldest. And they made a $100 million Bitcoin investment, which if you'd asked anybody that came from traditional finance that now spends their day jobs in crypto, how long it would take for a firm like Mass Mutual to show up, we would have taken the over on 5 years probably.
Oh yeah.
So the pace of this is quite significant, and I think it's taking everyone a little bit by surprise.
Definitely. And I'm just curious, because we've seen, for example, Paul Tudor Jones come out and just plainly say Bitcoin is a hedge against inflation, and that's why I'm interested in it. Is that something that comes up in your conversations with
Absolutely.
institutional clients? Okay.
Absolutely.
Okay. Yes.
But there's a lot of, so if you sit in seats like mine, there's quite a big variance of client types. So that includes folks that are dedicated crypto funds that exist just to be investing in crypto. That's why they got funded by their investors. So that's kind of on one side of the ledger, all the way through to big institutions that don't have a Bitcoin or crypto mandate at all, that are making their first investment as a bit of a hedge against inflation and monetary expansion. So in the former, you're talking that conversation is about all kinds of increasingly what seem to be more esoteric but increasingly mainstream investments in digital assets. But there's significant knowledge in that, well beyond Bitcoin among those folks. If you're speaking to the large institutions that are coming in and investing for the first time, there's a lot of education, but I would tell you that they show up knowing a lot. There's that's how the narrative is misconstrued, I think, in the popular press. There was at the end of 2017, we had this huge rally to 20,000, which took everyone by surprise. And then the market came down back off that, and we had a relative period of stability for the better part of 9 months or a year. And during that time, a ton of, and since then, which, goes back to kind of February, March of 2018, there has just been a ton of work done by any meaningful financial institution that's managing capital for other people, that manages third-party capital, essentially, has had some team of people doing work on understanding digital assets and further trying to unpack what would be their likely participation in the marketplace from a regulatory perspective, from a client perspective, et cetera. So when they're arriving now to actually make first investments in 2020 and into 21, you're well beyond crypto 101. And even when you first interact with them, they have a deep knowledge typically, and a team of people that's done a fair amount of work.
Right. So it isn't this thing where, institutions are suddenly like, hey, tell me about this Bitcoin thing. Like
there's some of that, but there's a lot less of that than you think.
Right. Okay. That makes sense. And then, I love how you said that, institution, on the other side of things, institutions like BitGo that have been working to create sort of the infrastructure for institutional investing in Bitcoin have been really, steadily working, to help us get to this point where all of these institutions are suddenly now entering cryptocurrency in a big way. I wonder if you can
Let me make a comment on that, because there's a funny, there's a funny kind of shift that's only happened recently, which is if so we spent a lot of years all building this this infrastructure ourselves and our, frenemies, for lack of a better description, and which we all, we've all worked on it together in a actually fairly collaborative way. And if we were at a conference in, pre-COVID, and this was happening regularly, and there were a lot of crypto conferences that would be quickly sold out. And it was increasingly becoming this echo chamber of us just all talking to ourselves.
Yeah, right.
Period as a market that really felt like there were more infrastructure providers than there were legitimate clients.
It's so funny.
And that's really changed meaningfully since about June of last year. And I, so now it's the opposite. Now we're all, onboarding clients as quick. We have a queue of folks that are engaged, and it's growing every day. And I would argue that, the Paul Tudor Jones news was very significant news. Mm-hmm. The fact that he made that, and he is such a thought leader in the investment community, for kind of a generation and younger. A little bit separate from the Warren Buffett generation, certainly. And he's a guy that has a great following of folks. That's a broad thinker and has participated in a lot of different markets in a I would say from a very intelligent risk perspective. He's has the ability to very much be new school, not old school, but understand, but has a lot of history behind him. And that was really, really a big deal. The fact that he made those investments and then was public about it and explained it to the marketplace was a huge deal. That to me was probably the single most important signpost that created real fundamental change than anything that's happened.
And it's so funny that you made that comment about crypto conferences, because that was something I was talking with Alex Mashinsky, of Celsius, and he said almost exactly the same thing, which is like he kept going to these crypto conferences and seeing all the same people over and over again, and it was not a good feeling. Yeah. But I wanted to ask you kind of by the same turn. So obviously there's been a lot of progress, both on the infrastructure side, also now with clients coming in. What still needs to be done, sort of on this infrastructural regulatory side, if anything, before we can really start to see even more clients, people maybe like Microsoft or Apple or, other companies. Yeah.
It's happening. It's the big issue is regulatory clarity, right? Okay. So there's a little bit of a kind of dirty little secret of all this, which is that this is still a marketplace that requires the traditional banking rails for folks to participate.
Yeah.
Like, you're not getting paid in Bitcoin. There isn't a Bitcoin economy yet that's meaningful. There's a need or a crypto economy that's meaningful. That's happening at some scale, but not meaningful enough to be disruptive yet. It will be, not yet. Okay. So for a big family office or pension fund or endowment to buy Bitcoin, they actually need the banking rails. They have to turn fiat into crypto. We'll help them do that, but they need to deliver us the fiat. And so they need a banking institution to allow to do that, right? So that's been a big hesitation for the traditional large banks. There's been a little bit of a market for crypto specific banks, and there are a couple of good ones, Signature and Silvergate in particular. But we're only in the early days of traditional banks now starting to be willing to bank firms, to bank large crypto firms. It's changing. Coinbase will go public. There'll be more of us that are you'll see a bunch of crypto infrastructure firms end up as either acquired or public entities over the next couple of years, in my opinion. And with that, that changes the paradigm a little bit in terms of how they're regulated, et cetera. But regulatory clarity, I think it's coming. I think there has been some, certainly, and it's coming. And that's the limitation more than anything, frankly, is the ability for firms, for traditional firms. I mean, you've had JP Morgan now come out just a couple of days ago and say, we think you should put 1% of the portfolio into Bitcoin. That is a massive, that was kind of ignored by the market, but that's massive news. Yeah. And as those things all happen, it creates a backdrop that provides air cover for investors. Remember, we're talking now about investors of third-party capital. We're not talking about investors of their own capital.
Right.
Family office invests its own capital. A private pension fund invests its own capital. But public institutions and large asset managers that are regulated funds, they're investing third-party capital. So there's some real need to be quite careful there. I think it's all changed. I think you'll see a lot of changes this year. I think you'll see an ETF and then several get approved by the SEC, and all of that just provides more and more and more of a base to the narrative for big institutions to participate.
Right, exactly. Yeah, this is going to be, I think, kind of a hell of a year for crypto. It already has. Yeah. But yeah, so I want to ask you a little bit about, in terms of what kind of demand or questions that you've seen from institutional clients outside of just Bitcoin. Has there been interest in staking, with some of these DeFi assets?
And that's increasingly from the crypto-centric funds.
Okay.
Right? Like back to that point about you can a little bit bifurcate the market into folks that are in the business of investing in crypto for a living, and folks that are just kind of crossing over and putting a little bit of a toe in the water.
Right. Okay.
So there's a deep dive happening by dedicated folks that are participating in DeFi protocols and doing all kinds of interesting things. It's not a completely bifurcated market, but there's a pretty significant difference of investment theses out there if you're dedicated crypto or not. What we hear the most from crossover folks is that, which is why we've built what we've built, is that they really need help solving some fundamental limitations of what the crypto ecosystem has been. So for example, it has been a pre-funded market. So to buy, you've had to pre-fund an account on an exchange, right?
Right.
So that's a really interesting and odd reality for a big fund.
Yes.
You mean I need to send you $50 million to some firm I've never even heard of 6 months ago, and then I hope you send me Bitcoin? Like, that's a crazy thing to them, right? So, and if you want multiple liquidity providers that you can check prices against each other and have them kind of compete for your business, you've got to pre-fund multiple liquidity providers.
Right.
So we built a system that solves for that. So there was terrible capital efficiency. There was some of the worst capital inefficiency I'd ever seen in my market. And I've spent a lot of years in financial markets, in traditional finance. And so what we built was a methodology whereby you can open a regulated and insured trust account with us, just like you would any other trust account with, that's a regulated trust company that we own, and have a dedicated account for that, right? And from there, trade directly with us, and we take care of all the capital efficiency on multiple exchanges on a platform on your behalf.
Right.
So we've got credit and capital on exchanges and liquidity providers around the world, and we go out and have them compete. You want to buy, we have them compete to give you best price, and you do the transaction with us. We take a tiny bit out, and it is not a lot. And we then have sourced for you and created capital efficiency for you so that you can get best price, but you can, more importantly, do it from a trust account. What's really unique and critical about this market is security. So unlike other asset classes, if these are transactions that can't be reversed. These are irreversible transactions. So capital's lost, it's lost. So there's a concept of what's called cold storage in crypto, which is taking effectively your access point, your keys, and pulling it all offline in a way that's held securely with a lot of secret sauce to what that means, with vaults and all kinds of crazy stuff that I'm not going to go deeper on because those are the real secrets. But the point is to take all that risk offline entirely. Yeah. So what we built was a system whereby you can trade from that environment. You can come to us and say, okay, now I want to sell. You used to have to effectively take those coins, bring them back online, and deposit them on multiple exchanges if you wanted to get best price, and hope you didn't get hacked, and hope you made the transfer properly and you didn't make mistakes there, et cetera.
Copy paste it correctly. Yeah.
Correct. With what we've built, you can come to us and you can trade on. You already have effectively the coins offline in a trust account that's insured. You can trade on our platform. Nothing moves from here until the transaction's already happened.
Right. Okay.
So it's a fundamental shift in how the market operates.
Right. It kind of takes, the fear and anxiety out of, taking a cold wallet or an encrypted hard drive and then, typing in codes and double checking, triple checking, making sure that everything is
Which is something that would scare me personally.
I am still scared when I send a crypto transaction. It still gives me the willies every single time. Like, yeah.
That's why we have people better than me doing that for a living on our side.
Yeah, exactly. So I want to touch on something you said a couple minutes ago, actually, which was this idea of the crypto economy. And you mentioned, right now we sort of live in this world where crypto is basically, I mean, like, I don't want to upset anybody, but kind of an extension of the fiat world. Like, you cannot really operate in a cryptocurrency space, without somehow interacting with fiat at some level. So, but you said that it's not there yet. I mean, do you think that we will eventually get there, to a point where there is a cryptocurrency economy that is, viable, feasible for people to use?
So I don't think let me answer the question in the reverse. I don't think we're going to live without fiat currency entirely. I don't believe that. I don't think that, I think there's going to be, I think there's going to be some element of a combination. The digital currency protocols and blockchain technology is clearly going to disrupt financial services, at least in my opinion. And that's going to mean central bank digital currencies will become a thing all over the world.
Right.
I think banks and financial institutions that are in the business of in brokerage and trading capacities are going to be challenged because there's a fair amount of margin that is still in the system that these protocols can unwind. That's happening already.
Right.
I don't ever think that the U.S. government, for example, is going to give up the dollar. It may just be a partially digitized dollar, but it's still going to be the dollar.
Right.
But there'll be some disruptions. There'll be some disruption in the way financial transactions happen, simply because it's a technology that allows for disruption, right? These are immutable technologies that are transparent, that are instantaneous, that can be done at incredibly low margins and move money all over the world, at shockingly low numbers. And if you compare the cost to wire, $1 billion to another part of the globe versus moving it on a blockchain, which we've done, it's just fractions. I mean, it's just not even on the same zip code in terms of the cost of that. So the technology is going to continue to disrupt, and it's in some ways it's the financial services industry. It's kind of shocking it wasn't disrupted prior.
Truly.
It's like the lifeblood of everything we do. Financial services and communication is kind of the lifeblood of everything we do. And as humans, and maybe you'd add energy, but that it's incredible. It hasn't been disrupted more already. That is a train that people aren't going to stop. But I don't know. I can't begin to wrap my head around, like, when you get paid in crypto, what does that mean? And do you live in a completely crypto? A lot of people will give you a lot of opinions on that. I don't feel like I'm smart enough to begin to unpack that for you.
No worries. I don't want to take up too much of your time here, so unfortunately we're almost out of time. But before we go, I want to ask you if there's any announcements that you have for BitGo, big plans over the next few years for you guys, also where our listeners can find out more about you.
Well, there are a lot of announcements coming. I can't give them to you on this call. We did just announce a great partnership with KPMG.
Congratulations.
Which I'm super excited about and spent a lot of time on that personally. I think that's a phenomenal partner for us. And together we solve a lot of the problems that the largest financial institutions in the world are going to face as they really try and figure out how they're going to participate. So that's great, and we're excited, and that there's a great team at KPMG, and we couldn't be happier about that. I would tell you that we are one of a couple of firms, and there are only a couple. There are a lot of firms that will interact with you with bespoke parts of this ecosystem. They'll have a specific specialty that they do. Maybe it's lending, as an example, but we don't believe that that's the way the market's going to want to interact. They're going to want real full service solutions, right. And we have an incredible portfolio tool that we've built that allows you to dump. That allows you to feed into via API your holdings from not just your holdings at BitGo, but your holdings at everywhere, including at our competitors. And it's a very impactful tool in terms of managing a portfolio. And from that, it kicks out great information and tax prep information. So there's like an embedded tax tool in that. We've got a trading platform that I think is fantastic, that has a bunch of liquidity providers plugged into the back of it, providing liquidity, and that's going to double in terms of liquidity providers over the next 6 months. So it will really, and already is, creating real network effect in terms of bringing liquidity together. And we believe we've got best in class cold storage capability, and that's been certainly the belief of many of the biggest clients in the market. So you'll see us make a lot of announcements, but all of it will be further refining a platform that will solve all of the problems of a financial institution that wants to enter this space. And we're easy to find. We're at bitgo.com, bitgo.com. And, or you can email me directly, Pete@BitGo, and we're happy to respond.
Pete, thank you so much. And thank you for your time.
Thank you. Appreciate it.
For more news, events, and podcasts like this one, visit financemagnates.com. Thanks for listening.